Let's move on and talk about the hottest topic right now. That's the crude prices cooling off and the impact that we can expect to see on the tire sector and the rubber space on the back of that. Rajiv Budhraja, the Director General, Automotive Tyre Manufacturing Association, Atma, joins us. And Rajiv, thanks so much for joining us this morning. First of all, help us understand that this cool off that we've seen in the crude prices, how much of an impact is it going to have on the overall tire space? Because a lot of these crude derivatives are used to manufacture tires. Do you believe that this is a trend that's here to stay? And how do you think it could benefit the tire players in the market right now?
Yeah, thank you. I think, first of all, we know that crude finally appears to be softening mainly because of the positive sentiment that is due to the OPEC plus announcing increase in output and the US also planning to drill more. Although in terms of numbers, it's not very significant. It's less than a quarter of a million barrels a day at the moment. But I think it definitely has propped up the sentiment and will reverse the sort of continuous cut in output that we had been seeing since 2022. Now, in terms of the impact on tire industry, it will actually depend on how this softening, plays out on the derivatives of crude, which are the intermediates and raw material for the tire industry. So as of now, we haven't seen any immediate softening or linkage with this kind of a movement, because as we know that carbon black feedstock, which is again a crude derivative for the making of carbon black, there are synthetic rubbers like PBR, SBR. So they have, not really shown the or mirrored the same kind of trend as of now. So it's kind of a wait and watch for the moment for the crude derivatives, which directly impact the tire industry.
Hi Rajiv, good morning. This is Shrishti also joining in. Well, of course, Rajiv, the cool off in the crude oil prices does bode well for the tire industry. But I wanted to understand the thing from you that on one hand, we see the crude oil prices cooling off. But on the other side, Rajiv, is the currency, the Indian rupee, that is seen to be weakening. Wanted to get your sense that will there be any real impact for the tire companies, or rather it could just nullify the impact of the crude oil prices cooling off with respect to the currency weakening?
Well, you've said it right, because rupee, as we've seen, it has moved from 83 to 87, around that level. So in a way, it negates the benefit of the softening of the crude oil, and its impact on the raw material. And for tire industry, as we know, since the raw material basket is fairly wide and import dependent, it does make an impact, particularly on natural rubber also, because as of now, 40% of our domestic demand for natural rubber is catered by imports. So yes, it is a negative impact there, the currency devaluation.
Right, the currency devaluation. Well, of course, Rajiv, that's what I thought about, because definitely crude did make up for the majority of the cost for the tire companies, and currency is seen to be weakening. But the other sense I wanted to get from you is on the rubber prices. What's your sense that where the rubber prices are headed from here on, and the likely impact for the tire companies?
See, rubber prices are more or less in a stable zone, both domestically as well as internationally. Uh, we don't expect a very significant, kind of play in the prices going forward, because as of now, overall demand also is somewhat, if I may say, kind of sluggish. We've seen in the domestic market, the February numbers that have come in of the OEMs, they are, not very buoyant or as per the expectations. So I think overall, rubber is in a, tight band of, stable, I would say, pricing as of now.
Okay, and Rajiv, also help me understand. While you said that domestic demand is looking sluggish, we understand that this has been quite tempered. But on the flip side, it's exports that has been taking a beating, and that's also looking sluggish right now. How do you believe this whole demand scenario will pan out, given the kind of global uncertainty that we're seeing right now?
Well, as we know, global headwinds are very strong, particularly from the Western world. For India, for Indian tire exports, also, US is a big market. It's the single largest market. But the if I may say, a slight comfort factor is that those headwinds are going to be hitting China and the other countries and the ASEAN countries much ahead of India, so to speak, and in a much stronger manner. So I think overall India should come out and emerge stronger in this. But in the short term, near term, it is a concern, and I think it would be prudent to wait and watch how this global tariff and trade, clouds, how they clear off.
All right, Rajiv, but with this, we let you go on that. Really appreciate you taking the time out and speaking with us and giving us a sense that what exactly is panning out within the tire space.
If you like this video, then like, share and subscribe to ET Now.